Welcome to The Explainer. Today, we're diving deep into the real source of investment alpha. And let me tell you, it's probably not what you think. The data shows that the true edge, that variant perception the pros use, is hiding in a place most of us completely ignore. Let's get right into it.
So let's just start with a number that should honestly change how you think about investing forever. When researchers studied the world's most elite fund managers, the so-called Maestros, they found something pretty shocking. 51% of their stock picks actually lose money. Yeah, let that sink in for a second. The absolute best in the business are wrong more often than they're right. So that immediately begs the question, right? If the best investors on the planet have a batting average that's basically a coin flip, how on earth do they consistently crush the market? Where is their alpha really coming from? Well, the answer is kind of simple, but it's also incredibly difficult to get right. Their edge isn't what they pick. It's how they behave. It is all about execution. It's about how you manage your winners, and maybe even more importantly, how you manage your losers. And that brings us to what might be the single most important number in all of investing, the payoff ratio. This little metric is the key to unlocking an asymmetric payoff. All it does is measure how much you make when you're right compared to how much you lose when you're wrong. Simple as that. Now think about it. A payoff ratio of 100% means you're just treading water. Your wins and losses cancel each other out perfectly. But the Maestros, get this, their median payoff is 182%. That means for every single dollar they lose on a bad idea, they make back $1.82 on their good ones. This isn't just a nice-to-have metric, it's their holy grail. And look, that incredible payoff ratio isn't about luck, not even close. It's a direct result of disciplined behavior. In fact, research shows that you can pretty much group all investors into these distinct categories, or tribes, based entirely on how they react when a stock starts moving. So the researchers found 5 of these tribes. See if any of these sound familiar. You've got the rabbits, who just freeze like a deer in headlights when a stock drops. Then there are the assassins, who cut their losers without a second thought. The hunters, who actually buy more as a stock goes down. The raiders, who sell their winners way too early. And finally, the connoisseurs, the ones who let their winners run and turn into massive gains. So here's the bottom line. The patterns are crystal clear. The unsuccessful investors, they act like rabbits and raiders. They're paralyzed by fear when things go bad, and they're way too quick to grab tiny profits when things go well. The winners, they're always connoisseurs with their winning stocks, and they're either assassins or hunters with their losers. They are masters of their own psychology. But there's another winning tribe, a 6th one, the lumberjack. Now, instead of making big, concentrated bets, lumberjacks plant dozens of little seeds, really small initial positions. It's a brilliant risk management strategy. If one of those little seeds dies, who cares? The portfolio barely feels it. But when one of those seeds starts to grow into a giant redwood, a huge winner, they can just sit back and ride it all the way up without getting scared by a little bit of volatility. It's a really powerful approach. Okay, so this is all fascinating stuff. But how do we go from just looking at profit and loss to, actually measuring this skill? Can you really put a number on good decision-making? You absolutely can. It's called the behavioral alpha score. You can think of it like Moneyball for investing. It uses a process called decision attribution analysis to basically strip out all the random luck from your portfolio's performance. It really answers that key question. Are your results because you're skillful, or did you just get lucky? And the way it does this is by analyzing these 7 key decisions. Now look closely at this list. Only one of them is picking. The other 6 are all about execution, sizing your bets, timing your entry, scaling in or out. This is the hard data that proves the game is won or lost after you click buy. And here's why this is such a game changer. The data shows that an investor with a behavioral alpha score over 50 is 1.5 times more likely to beat their benchmark in the next year. That's huge. It means your past skill, not your past performance, is a way better predictor of your future success. So let's look at how this all works in the real world. How do the Maestros make sure they behave the right way? Well, they don't rely on willpower. No way. They build systems to force themselves to be disciplined. Okay, take Maestro Josh Goldberg. He's a classic assassin. He's got this one simple, totally ruthless rule. No single stock can ever lose more than 1% of his entire fund. Period. This forces him to cut his losers like a machine, and it takes all the emotion and all the ego right out of the decision. It's his portfolio's ultimate defense. Now let's look at the complete opposite. John Barr is a lumberjack. He invests in super volatile small cap stocks where, a 70% drop is just another Tuesday. He knows for a fact that if he used a standard stop-loss rule, it would have kicked him out of every single one of his biggest home runs. So his system isn't based on price. It's based on business milestones and really smart position sizing from the start.
And this one is just brilliant. It shows how you can use tech to keep yourself honest. Meister Gorm Thomason built an automated alert. When any stock in his portfolio is up more than 40%, a little message pops up on his screen asking, "Are you feeling lucky, punk?" It's funny, yeah, but it's also a brutally effective way to check your ego and ask yourself, is this stock still going up for the right reasons, or am I just getting carried away?
You see, these aren't just a bunch of quirky, random rules. They're all part of a bigger philosophy. The Maestros build systems, what we call structural discipline, and they're designed specifically to fight against their own worst human biases. They know that our own brains are the weakest link in any investment process. One of the most powerful systems is something called a pre-mortem. Before they even think about buying a stock, one team does this exercise they call "Why Are We Idiots?" They literally imagine the investment has already failed miserably, and then they work backwards to brainstorm every single reason why it might have blown up. It forces them to face the worst-case scenario right from the start.
Another amazing tool is Gorm Thomason's boiling frog screen. It's a computer model designed to catch the slow, quiet decay in a company's business. The kind of danger that creeps up so gradually that your brain doesn't even notice it until it's way too late. Just like that poor frog in the slowly heating pot of water.
So the whole point of all of these tools, the strict rules, the pre-mortems, the computer screens, it all comes down to creating one thing: structural discipline. It's about building a framework that yanks your emotional, irrational self out of the driver's seat, especially when the pressure is on. All right, so all of this leads us to a pretty radical but totally necessary change in focus for any serious investor. It's time to stop thinking of yourself as a stock picker and to start seeing yourself as a master of execution.
So here it is. This is your new mandate. Number 1, stop the endless, exhausting hunt for the next hot stock. The real money is made in your process. Number 2, when you're wrong, your only job is to free up brain power. Admit the mistake quickly and move on. The mental energy you save is worth more than you can imagine. And finally, number 3, learn to do nothing when you're right. Master the art of just letting those rare giant redwoods grow to the sky. And we'll just leave you with that thought. The path to becoming an elite investor isn't paved with better stock picks. It's built on a rock-solid foundation of disciplined execution. So the only real question left is, which path are you going to choose?